Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. Now, I'm gonna start with the chart. Usually we end with the chart, but right now we can see that we sit just above the 200-day moving average. It has been an exceptional week for Tesla stock. We're now at $197.6 after hours. The 200-day moving average sits at $196.8. So let's see, we definitely have some positive momentum for the stock. Up next is going to be the production and delivery numbers, earnings report, and then beginning of August, the 8/8 event. Now, as you can see, if we zoom out, yes, we are nearing a point where the stock will either break out of that downtrend that started way back in November 2021, or it will fail if the numbers are still not great, if outlook is still not good, and if the event is again hyped up but does not deliver. That's the worst case scenario. Of course, on the flip side, if suddenly margins have bottomed, if the outlook is rosier than expected, and the event actually delivers, we get a good demo and maybe even a one last thing. Here are the 3 next models for Tesla. Then yeah, you could expect the stock to go up quite fast. But all of that is just speculation. Let's focus on what has been happening for Tesla in the last couple of days. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's start with the latest Tesla China weekly insured number. It was an excellent week, 17,500, so huge recovery from the last 2 weeks, which were good, but of course weaker than Q2 back in 2023. Now we have recovered. Quarter over quarter, we are up 13.1%. Year to date, we're still down 4.6%. Now looking at the model mix, Model Y, Model 3, now we can clearly see what I would assume this is the effect of the Model 3 performance starting in China. Huge increase here in Model 3 sales, also a little rebound for the Model Y. But Model 3, definitely we're now seeing the positive effects of this model, the refresh, and the performance one as well. If we look at Tesla compared to Mercedes, BMW, and Audi in China, they are, let's say, about in the same range. Comparing the Tesla Model 3 to the Xiaomi SU7, we can see now back a huge increase, probably again the Tesla Model 3 performance. Moving on to Europe, so these are the European daily markets BEV sales in the second quarter of 2024 by brand. These are for the markets in Spain, Netherlands, Norway, Sweden, and Denmark. Clearly here you can see Tesla leading the way. As for Norway, which has been a country where EV adoption has really exploded in the last couple of years, this year growth has slowed down substantially, but as you can see, it has been accelerating in the last couple of days. As for Italy, the month of June for 2024, you can clearly see a huge increase in sales. We've talked about the aspect of the small countries this year taking, let's say, the burden of a weak Germany, UK. Those are 2 huge countries for Tesla in Europe. Now the smaller ones are showing their strength, which could soften the blow. How much remains to be seen. But I do think that the expectations were extremely low for Tesla. I think the numbers will come in maybe slightly better than expected. Maybe margins will also have bottomed, and that could be enough for the market. They also mentioned that in the earnings call, free cash flow should be in the positive yet again. Moving on to some analyst comments on Tesla's cost-cutting efforts, their huge advantage or their, let's say, big advantage over the rest, Optimus robot, autonomous vehicles, and all of that. So Goldman Sachs, if Tesla can achieve roughly a quarter to a third of its original cost reduction target, it would result in an estimated $5,000 to $7,500 reduction in cost per vehicle when scaled to higher production volumes. Tesla Model 3 and Model Y are currently offered starting at $39,000 around and around $45,000 respectively in the United States, and for about $32,000 USD and $34,000 USD respectively in China. If Tesla were able to lower cost by a net of $5,000 to $7,500, it would imply a Model 3 for sub $35,000 in the United States and sub $30,000 in China, and a Model Y that may start in the United States for sub $40,000. And of course, you still get the $7,500 reduction from the credits, which of course should increase demand quite substantially. But then again, if people don't know about it, they won't buy it. So we're back to the discussion of should they advertise. I think that by now we're all in the same page, on the same page. Yeah, same page, same boat. They should definitely advertise. I've talked about that on X. The the next World Cup 2026 is in Mexico, Canada, and the United States. I truly hope that Tesla will massively advertise. Billions of viewers, tourists from all around the world, billions of viewers worldwide, would be ashamed not to take that opportunity, just like BYD, Alibaba, and I think it's Oppo or Vivo, one of these Chinese phones, are doing right now in the Euro 2024 in Germany. Then some positive comments from an unlikely corner, Business Insider, are saying that Tesla still has one massive leg up on every automaker. What is that? Well, again, the cost per vehicle. The amount the company spends on components like metal, glass, battery packs, wheels, and tires average under $30,000 a vehicle. A new analysis from Bank of America found that's $17,000 cheaper than non-Tesla EV component cost and about $10,000 cheaper than the industry average, including Tesla, the bank's analyst estimate. Even as Tesla's margins shrink and sales slow, the lower input cost keeps Musk ahead of its legacy competition. Companies like Ford and GM are relying heavily on their gas-powered profits to fund their electric futures. Neither company has turned a profit on its EVs. And to be honest, I don't see it happening anytime soon because of the lack of demand in EVs. Now, I know it's a strange thing to say, but unless we see a reacceleration in demand for EVs, because we've seen people are still buying ICE vehicles, still think that hybrids are the way to go. Until then, you cannot scale up, you cannot ramp up production, and you will still be unprofitable until that happens. Taking a break here from Tesla, we have to talk about the electric hypercar maker Rimac from Bugatti Rimac. They unveiled this week their robotaxi prototype called Verne. They will begin operations in 2026. It's a two-seater, no steering wheel, nothing. It uses Mobileye technology. The vehicle is level 4 fully autonomous, has a 43-inch display, 17 speakers. Rimac has already signed agreements to launch it in 11 cities in the EU, UK, and the Middle East, and is negotiating with more than 30 cities worldwide. This will definitely be a nice preview of what a Tesla robotaxi could look like. Of course, the August 8.8 event, we could already get a nice little sneak peek, if not a demo. But I'm not gonna lie, Rimac doing quite a good job here. Going back to Tesla, now talking about the bot. Now we know the bot is not happening tomorrow or next week or next month or even next quarter. It's going to take quite a while. And that's fine, because the opportunity here is immense. So this is again from our favorite analyst at Morgan Stanley, Adam Jonas. He thinks Tesla's Optimus humanoid robot will initially cost between $50,000 to $60,000 to make. We estimate Tesla Optimus Gen 2 current bill of materials is between $50,000 to $60,000 per unit, excluding software. However, with the benefit of scale, the introduction of AI algorithms to significantly shorten the R&D cycle, and the utilization of cost-effective components from China, we see opportunities for significant cost reduction to achieve CEO's Elon Musk targeted Optimus selling price of around $20,000. Now, here on the picture, you can clearly see how they get to that price. To be honest, bravo. Respect to these guys there to actually put in the work and dive deep into everything Tesla related. I don't see many other Tesla analysts or analysts as a whole doing such a great work when it comes to a publicly traded company. The note he released, or the blog post, because at this point it is really a blog, it's 10 pages long. So he said, we believe the humanoid opportunity is far bigger and faster adopting than autonomous cars, and we will see a greater quantum of capital behind it. Tesla is at the epicenter of the team. Investors may need to add new tabs to their Excel models. Adam thinks the humanoid robot addressable market is $30 trillion. Quote, in our US TAM model, we forecast a humanoid population cumulative and installed base of 8 million units by 2040. That's $357 billion wage impact, and 63 million units by 2050, a $3 trillion wage impact. We believe that humanoid time to commercialization will materialize faster than autonomous vehicles, given the variability of the autonomous vehicle operating environment, the real world, and corresponding safety implications, human passengers, pedestrians versus the humanoid form factor, which can learn in a geofence domain, warehouse, factory closed work cells. Even though humanoids have more physical outputs, the difficult operating domain, safety concern, and regulatory scrutiny that autonomous vehicles face pushes their adoption curve out to the right in our view. And I couldn't agree more. This is something we've talked about a long time ago. I believe also because of Adam Jonas's note, it just makes sense. The humanoid robot is inside, well, will be inside most of the times, or at least at the start. Autonomous vehicles, you need it to be outside in the wild. But again, this is not something that will happen anytime soon. But still, 2040 is 16 years from now, 8 million units. 26 years from now, we are at, well, they estimate 63 million units. That's a huge jump from 8 to 63 million units in 10 years. Now we're basically going from 0 to 8 million in 16 years. Then you're going from 8 to 63 in 10 years. I mean, this thing, if you put the numbers on an Excel or whatever on a napkin, these numbers become so big. It's definitely worth the wait. And even if these are extremely bullish numbers, even if that is the case, so what? Even if you only get half of it, that's still a huge opportunity. And so to conclude, short-term wise, yes, there are a couple of catalysts that could make the stock move on the way up, on the way down. But longer term, if you look at the big picture, if they execute correctly, the sky is definitely the limit here, and the price we're at today, the valuation we're at today, will look like nothing, just like 10 years ago. If you look back, it really looks like nothing. Of course, they have to execute, things have to work out for them. Sometimes you need to be lucky, but you make your own luck. So that's about it for this video. Next week, the video might be filmed in Denver, Colorado. If anybody is near there, let me know down in the comment section below. If you got some travel trips, let me know as well. That will be it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.